Welcome. This is Bert Dohmen with Chart Guru. Today, May 4th, we're going to be talking about the message of the markets. Today, uh, there is a lot of ground to cover, so we won't have the answers to these, but you will see the charts which tell a big story by themselves. For further information, please go to our website, which is domencapital.com, and you can see what our services do. We give complete explanations and our analysis and forecasts in those services. First, let's look now at the TLT. This is the ETF. It's leveraged for the 20-year Treasury bonds. And this is a great vehicle. We got into it in March, and it's had a nice run since that time. This is a weekly chart. Each bar is 1 week of trading. So you can see here the high, which was in 2012 actually. The decline since that time as interest rates went up. Okay, when interest rates rise, bond prices go down. But now we're seeing something very interesting. Just now, this is here, January, beginning of January this year, when the Federal Reserve started its taper, actually withdrawing stimulus, which everyone thought would cause interest rates to rise. But actually, we're now seeing bond prices rising, which means that interest rates are coming down. So this is something that has a lot of commentators puzzled, but of course our subscribers were not puzzled at all. We know why this is happening, and we talk about it in our Wellington letter, which is now celebrating its 37th year in business. Here you can see how technical analysis, our technical indicators gave great sell signal right at the top here, and gave a nice buy signal here at the bottom, which came about right here. So this is how you can make it easy for yourself, just having good technical indicators or a good guide, such as in our services. We've been doing this for a long time. We'll take a look now at the equity market. The following is a chart of the Dow Jones Industrials. It's a monthly chart where each bar, this is a bar right here, and this is a bar, is 1 month of trading. It goes all the way back to 1996. And here we can see if we can connect the tops here of these major bull markets, we get to a point here where the index right now is bumping up against that trend line. Usually such trend lines are very important resistance. So this suggests that we have to be extremely alert now. For more information on the interpretation of this chart, and then of course the other charts, go to our website, domencapital.com. This chart is of the Dow Jones Industrials, but it's a daily chart. Each bar of right here, each bar is 1 day of trading. So it's a very short-term chart. It goes back to 2013. Here we can see now the index is bumping up against the resistance level. Here in April, got up to where it was at the beginning of January, made a slightly higher intraday high, but that doesn't count. Intraday highs are not important. And here again in early May, it did the same thing, but was repulsed again. This is now very critical, and something that we're going to be watching very carefully. We do have 2 short-term trading services: Smart Trader for stocks, the Fearless ETF Trader for ETFs. And you can take advantage of the upcoming moves which we foresee, and you can make a bundle of market here over the next several months. And finally here, today let's look at the daily chart. It's again a short-term chart of the NASDAQ Composite. This has been quite a bit weaker than the big cap stocks, which is always a warning signal. At important market tops, the NASDAQ and the small cap stocks are much weaker than the big caps. The big caps serve as kind of a safe haven where the money goes first from the more speculative areas, and then finally the money leaves those areas as well and goes into the bond market. Here we can see the regression channel of the NASDAQ. It held very nicely here for about a year. We used 2 exponential moving averages, and they did not cross over here this whole time. They stayed nicely apart for a continued buy signal, except here early this year in January we had the first big correction, but they turned right over again, and went to a new high. But now we're seeing it staying below here. The two exponentials have crossed over and they're staying on a buy signal, at least so far. We connect the tops of these little rallies since the March high, and they have kept the market back. It's always possible, of course, that this time the market will go above that. Here is a 200-day moving average, and as you know, that is considered the basically the barrier between a bull market and a bear market. Here, that line served as support, and a market rallied nicely. Here on some of the other indices like the small caps, I also hit that line again, so that is support. Wall Street does not want people to get the idea that we're in a bear market, so that is support right now. We discuss these charts much further in our services. Go to domencapital.com. And this is all for the presentation today. We just wanted to give you a quick idea of what the markets look like right now. We think we're at a very important time in the markets, and there is lots of money to be made. This is Bert Dohmen signing off. Thank you for joining us.